because we'll have passed the point in time last year when those pension obligation bonds were redeemed. This chart is showing the SERP Fund, so that's the OPEB Trust Fund. And the reason that this chart is in here is because I wanted to make clear that this money is not reflected in the district-held funds. So this money is invested completely separately. It's restricted so that the money in this trust can only be used to pay for future retiree medical premiums. As of October 31st, 2019, there was a balance of about $45.8 million, which is made up of cumulative contributions since the district started contributing, I think back in 2013, of $36.3 million, and investment earnings to date of $9.5 million. So turning to look at some of the operating activity for this current fiscal year, this chart is showing medic cost recovery. And just a reminder that when we're sort of in the middle of the year, the way that we're reporting this is on an actual receipt basis. So the $15.8 million that you see on that red line for current year actual, that's the actual amount of money that we've collected July, August, September, October. You may remember that I mentioned at the last meeting about $2 million of those collections this year is actually related to some retroactive payments associated with the GEMT Quality Assurance Fee Program that really are going to be recognized as fiscal year 18-19 revenues. So when we get to the end of this fiscal year, we would expect to see that adjustment. So that's accounting for most of the difference between that red actual line and the blue budget line. If it weren't for that roughly $2 million in revenue for 18-19 that's being reflected here, we would be slightly above the budget line, but not as significantly as is being shown here right now. We're budgeting for total revenues for the current fiscal year of about $39.6 million. So this chart is showing us revenues from all sources, including the medic cost recovery revenues you just saw. And looking at the red line here, you can see we have total revenues of $19.2 million this fiscal year. And we're projecting total revenues for the entire year of $227 million, so that's that blue line. Comparing where we are right now, the red line to the blue line, you can see we're kind of right on that budget number. And I just told you, you just saw from the medic cost recovery that we're reflecting additional medic revenues above and beyond our budget. So really what's offsetting that to put us kind of right on the budget line is the fact that we have a lot less deployment activity this year than we had budgeted for. So our deployment reimbursements are a lot lower than budget, and that's kind of offsetting that the increase over budget on the medic revenues to put us right at the budget line. Turning to look at expenses, this is showing our salaries and benefits expenses. So actual expenses through October of $62.7 million and a budget for the year of $186.8 million. We are a little bit below that budget line, and that's really primarily for the same reason. So less deployment activity means less salaries expenses related to budget. This chart is showing total expenditures, so including the salaries and benefits, but also services and supplies and other expenditures. So total expenditures in the general fund as of October 31st was about $80.6 million, and that compares to a total budget for the year of $228.2 million. And you'll see that this line is also trending a little bit below, the actual trending a little bit below budget, again, in part because of the deployment activity, but also in some of our non-labor expenses, so services and supplies were lower than had been budgeted initially. We're still estimating that those expenses will be incurred during the fiscal year, but just later than was originally anticipated. And finally, this chart is showing our general fund operating reserves. So essentially, you'll remember the way that this gets calculated is that we have a starting reserve balance, and we're adding to that the revenues that we have received during the fiscal year and subtracting expenses. So our current calculated reserve balance is a negative $35 million, which is represented there by the green line. You can see comparing to the red line, and just having sat through previous of these presentations, you'll know that it's typical for us at this point in the year to have a negative reserve position. We've not yet received our first installment of property tax revenues. So I would expect, again, by the next report, which will reflect an additional 2 months of activity, we'll see that jump back up into positive territory once we reflect the property tax revenues. The other thing that I wanted to point out is that our starting reserve balance will be adjusted as a result of the audit for fiscal year 18-19. So this is reflecting an estimated balance based on our unaudited results for 18-19. We do know that there will be an adjustment. I mentioned one of those reasons earlier, so that $2 million in quality assurance fee revenues, that's going to be reflected back into 18-19. That would have the effect of increasing our adjusted starting balance. So I would expect by the next report that we'll have a revised starting balance for this chart as well. So in summary, for the 4 months ended October 31st, overall, revenues are on track with budget. As I mentioned, we have some GEMT quality assurance fee payments that were received in the current year that are really related to prior year activity, and those ultimately would be adjusted out of the fiscal year 19-20 revenues and reflected in fiscal year 18-19. And again, that increase that's being shown right now is also being offset somewhat in terms of our total revenues by the fact that we have less deployment reimbursement than we had budgeted for. Our expenditures are trending higher than the prior year, but lower than budget at this point in the year, both in terms of the deployment activity related to salaries and benefits, and also our services and supplies, a little bit delayed in terms of how we had initially budgeted for those expenditures. Our cash balance is lower than the prior year, as I mentioned, due to the redemption of the pension obligation bonds. I think, when we're looking at the next report in a couple of months, that those should be relatively comparable numbers. And then finally, our general fund reserves of negative $35 million at this point in the year are consistent with the prior year level. We expect to be in a negative reserve position right now, and would expect that to be in positive territory as of the end of December report once we reflect the first installment of property tax revenues. And that concludes my report, but I'm happy to take any questions you might have.
Any questions for the Chief Financial Officer? No? Amanda Thomas, thank you very much for your presentation and report. And, well, we look forward to seeing that first property tax
Right.
hit the accounts, right? Okay.
Thank you.
Thank you again. All right, then. Next meeting date will be the 23rd of January, 5:30 p.m. Any anticipated action or presentation items will be determined. If you have anything, speak up. All right, then. We will adjourn this meeting.